Welcome to our Financial Statements video training. In our training, we assume you know little or nothing about the financial statements. As a result, we minimize the jargon and try to communicate this topic as clearly as possible. We will begin now with part 1 of this 14-part video series. In part 1, we will begin with a brief introduction to the main financial statements, as well as some of the basic accounting principles or rules. After that, we will discuss the balance sheet's heading and the reporting of a company's cash. Please print the PDF handout shown below this video, as it will be used throughout the training. We will start on page 2 of the PDF handout, which has the heading General Comments that apply to all 4 of the financial statements.
This seminar is focused on financial statements that are distributed to people outside of your company, such as bankers or investors, other lenders, etc. Our presentation does not cover income tax accounting, which may have different rules for certain transactions. For the financial statements distributed outside of a company, accountants must follow some common rules known as generally accepted accounting principles. In the U.S., these are known as U.S. GAAP, or simply GAAP. U.S. GAAP consists of some very basic underlying principles and also some very complex detailed rules. Our focus in the seminar will be on these basic underlying principles and concepts, such as the cost principle, the matching principle, full disclosure principle, consistency, objectivity, materiality, and a few others. So the point of this is we're not going to get into all of what's entailed in accounting, so this is no replacement for having professional accounting advice for your specific needs. We're trying to give you an overview of the financial statements and let you understand why some numbers are shown at cost and some other information. So the other important point is that our financial statements that we distribute outside the company are prepared under the accrual method of accounting, and that's different than the cash method. And under accrual accounting, revenues are reported on the income statement when they're earned, and a receivable is reported on the balance sheet when they're earned. And we don't necessarily wait for the cash to come. So that's an important distinction that we'll repeat throughout this evening. Accrual accounting also means that expenses are going to be reported on the income statement at perhaps a different time than when the money is spent. And liabilities will be reported when they occur. So we're going to do our best to give you a great overview of financial statements, and again, you must understand that we cannot possibly cover all of the areas of accounting. Students take 150 credit hours at college and have to go through a rigorous exam to be CPAs. So the content in accounting is vast, and we're going to give you an educational overview. So be sure you have the printed handouts that come with this seminar video as we're about to begin the discussion of the balance sheet. The next form that you look at has the balance sheet down the left side, and its heading says Sample Retailer Inc. Balance sheet March 31st. So we're going to use that as a discussion. On the right-hand side of that handout, I've printed in very small print, and apologize to people who have not such great vision, but we wanted to get a lot of notes down here to save you the time of making them. So each line of note corresponds to the line on the financial statement. So for example, the first line at the top in small print on the right says name of company or the enterprise or the organization. So we're referring to the heading Sample Retailer Inc. So we always show the name of the organization as the first line on a financial statement, no matter what the statement is. The second line tells us it's the balance sheet. And then the small notes to the right say that that's also known as the statement of financial position. Now the balance sheet is unique among the financial statements in that it's going to show a point in time. It's going to say just a date, March 31st. So that means midnight at the end of the day on March 31st, here's the company's balance sheet. Here are their assets, here are their liabilities. The other statements that we're going to look at are going to cover a period of time. So the income statement covers a period. So some people say that the balance sheet is like a snapshot. It's because it's an instant. And the other statements are like a movie in that they cover a whole period, 3 months, a year, whichever period. So we're going to stay focused on the balance sheet. And when we look at these amounts, these are the amounts at the company at that point in time. Shortly thereafter, these numbers are going to change. For example, under current assets, we see cash and cash equivalents. That $24,500 is the amount at that instant. After all the transactions that pertain to March 31st are recorded, that's the amount in the checkbook. The next day, that number is going to change, right? As soon as they write another check or deposit some money. Okay, now before we go down the whole list here, I want to mention that this is known as a classified balance sheet. It's called classified because there are classifications for the assets. So in bold print, as you look down the left side, you see current assets in bold, investments, property, plant, and equipment, intangible assets, and other assets. Those classifications are used on a classified balance sheet. And generally, people prepare this type because it's very helpful to the readers. For example, the current assets are going to be a very important indicator of the company's liquidity. So as accountants, we list all the things that are going to turn to cash within 1 year in that section. So next to the words now current asset, you'll see cash and assets that will turn to cash within 1 year of the balance sheet date. So we provided you in those notes a little tip to make it easier for you. Going to the word assets, it refers